What?
What's this?
It's my top line.
Woo! Is it a baby growth or a onesie?
Why? Right, ready to start?
Well, which way am I meant to be facing?
I'm going to stand here like this, sitting like that.
Stand?
Or sit like
I've
that.
got no room.
What do you mean you got no room? Right, you're going to have to move the chair. You doing your hair and stuff, feel good?
Yeah.
Yeah?
I don't know, do I?
I don't know. Do you want to introduce everyone?
No.
Hi everyone, it's Ruth here from the Binary Destroyer.
But I'm not from the Binary Destroyer.
Come on, do it. Do it. Hi everyone, it's Ruth here from the Binary Destroyer.
Hi everyone, it's Ruth from the Binary Destroyer.
And in today's video,
It's Ruth from the Binary Destroyer.
And in today's video, we're going to be teaching Ruth to trade. Now, she has no clue about trading, zero. But I've set myself a challenge. We're going to do 5 videos, 5 webinars, 1 hour per webinar. And by the end of the 5th video, she will hopefully have a funded live account and she'll be able to trade live in front of you. Now, it's a very big challenge because we just had our first webinar and she didn't have a zero clue. I mean, I was talking to her about uptrends, and when price goes above a moving average, it's an uptrend. And she went, Jamie, what's a moving average? What's an uptrend? So I've got a big challenge. But let's head over to the charts now and begin. Right, okay. So we're good. So first of all, okay, do you know anything about trading?
No.
No. God, you look well nervous.
Thanks.
Right, okay, now first of all, right, you need to understand when we're trading, we're just trading an edge in the market. Okay, that's all we're doing. So you never, even though sometimes you see me make money, I'm not always going to get it right all the time. Okay, so you need to understand that. It's not, you don't learn something, you don't learn to trade and then just magically make money. Okay, you got to be consistent. It's like trading an edge. It's a verge, right? How to explain it? It's like going to a casino and you got a roulette table and you got a 50-50 chance. Yeah?
A better analogy would have been, it's like you're edging snowboarding, but you're not always going to stay on it.
No. Go back to roulette. It's like roulette, okay? You got it's like red or black. 50-50 chance winning, 50-50 chance losing, yeah? You put your money down, you're either going to win or you're going to lose. Now that's exactly the same with trading, and it shares the same psychological like pressure and emotion. But what we need to do, instead of having a 50-50 chance of winning, we need like a 60, 70, 80% chance of winning. Okay, so you're gonna put your money in and you might lose. You might lose once, you might lose twice, you might lose 3 times. But what we need is that 60, 70, 80 consistent chance of winning. Right? So don't think after I've taught you that you're just going to win, because it doesn't work like that. Let me just mute some of these here, right? Stop video. So you need to understand that, right? Because even I have bad days. Even sometimes I take trades and they just instantly lose. Like, it's just having a consistency in the market. So nobody will single-handedly own the market. Okay, like for instance, the currency pairs we're looking at now, there's like 6 or 3 trillion is traded on it every single day. So it's based off supply and demand. When people see price falling, people sell, drives the price down, then price will be at a low, like Euro USD will be at an all-time low, and then people buy, and price goes up. But there's no single person owns the market. It's just supply and demand. More people are pumping money in, the more price will come down, the more people will buy a currency pair, the more it will go up. Do you see what I'm saying? So there'll always be people making money and people losing money. When people are buying, people are selling at the same time. You know what I'm saying? So what we need to do is understand it's just a probability game. It's just a consistency. It's just trading that edge. So you got like an edge, and we just need to make money. You got it?
Mm-hmm.
Okay. Now it comes down to two things really. Two things. Obviously, your biggest problem is going to be your own ability. Like, I can teach you to trade. If you have £100, you won't get £200 for then £400. You will get £100 to 140. This is Michael Austin. This is. If you have £100, you won't get 200, 300, and 400. You will get 100 to 140, and then down to 120, and then up to 160, then down to 150, and so on. Account will never just go up. I.e., good and bad days. Yeah, exactly that. Right. So it's just a consistency. So you don't just. At the end of this 5 webinars, you're not going to just make money every single day. You might have, if you trade 5 days a week, you might have 3 good days, 2 bad days. Next week, you might have 3 bad days, 2 good days. It's more about, you know, when you put money into a savings account, you make a percentage.
Mm-hmm.
Yeah, it's like that. You're making a percentage. So you put £100 in, by the end of the week, you might make 120.
You do realise I do the RSCS.
Yeah, I know, but I'm just trying to explain to you about Forex trading. Forget what you learn, right? Because you can be as smart as you want. You can be academically smart. You can be good at maths. You can be good at English, equations, percentages, decimals. It means nothing. Honestly, it means nothing in trading. It's all to do with your own self. Because there'll be times you'll take a trade and you'll be like, oh, Jamie, you know, am I doing the right thing? I'm up money, I'm losing money. Because if you lose 4 times in a row, let's say you take 4 trades, you lose every single trade, are you then going to take another trade and have no emotion and feel like, oh, because I've lost the first 3 trades, I'm going to take another trade and lose it? Like a good trader, right, a really good trader is someone that takes their emotion away from money. Do you know what I mean? Like people go into trading and think, oh, I just want to make money. And when they lose money, they get emotional about it. So the hardest part of learning to trade is yourself. Like how I learned to trade was I lost so much money, I just didn't care anymore. Like if I put money into a trading account, I knew I was going to lose it. So I had no emotion again around it. And then from there, I wasn't trading for them to make money because I thought I was going to lose it. I built account up slowly from that because my emotion for it went away. A lot of people put money into a trading account that they can't afford to lose. Then they lose it. Then they get upset. And then they blame someone else. And then the cycle repeats. You know what I'm saying? Right. So what we're going to do, okay, is we'll go briefly into the charts, okay, and then we'll have a quick look at what we're looking at. Like I said, everyone, if you want to ask any questions, ask away, okay. Obviously, we'll do a 1 hour webinar, okay. We'll do 5 webinars, and each time I'll refresh her, and then by the end of this webinar, okay, she will have a funded live account, and we'll see how she gets on. So hopefully, at the end of today's webinar, we'll go over some strategies and then we'll move on from there, because the easiest way for you to learn, and this is how I learned from teaching other members, is it's best for you to trade and then I see your strengths and weaknesses, because, you know, I can teach you something that you might already know, you know, and everyone's got different strengths and weaknesses. So ideally, let me just mute this guy. Stop video. So ideally, I need to see how you trade and see where your strong points and bad points are, because like I said, you know, it doesn't matter how good you are and how smart you are if you haven't got it. Right. So what we're gonna do, okay? Looks very scared. Yeah, she doesn't like.
She's laughing at Sarah at the minute.
No, she doesn't like being on webcam either. She's like, I don't like being on TV. Right, what we're going to be doing, okay, is Michael Austin's in it, the guy that has to ask his wife permission to come out. We're going to be trading his strategy, the AND strategy. Now, the reason why I've chosen that strategy is because it's just a simple strategy. Now, like I said, in trading, it's about trading an edge, yeah? So there's millions of strategies, loads of them. Like, all a strategy is certain things happen on the charts for you to enter a trade. So you wait for this to line up. Like, for instance, here, let me find you a signal. Okay, here we go. Let's find a signal here. Like here, okay, this is an arrow. Where's my nomination? Hold on. Where? Right, so this here, this there, is my entry point into the market. So an arrow has appeared outside of the zone, and I'm going to sell the market. Do you get it? Okay, so would I take that trade?
Yeah, because it's going up.
No.
The price is going up, you'd sell it.
No. Right?
You'd buy it.
No, you wouldn't buy it either. So
it's going well.
So these arrows here, okay, these arrows here are no trades. We only take a trade. Well, it's actually probably easier to explain to you about the binary destroyer. Let me explain the binary destroyer first. Right. Okay, so this is the sell zone, which means we sell the market. This is the buy zone, which means we buy the market. Okay, so when price enters this sell zone, we sell it. When enter the buy market, we buy zone, we buy the market. In between these two zones here is no man's land. We don't take trades in between those zones. Okay, so for instance, we go back to this here, this trade here. Okay, these are not trades because they're in no man's land, and we take this trade because it's
a sell zone.
In the sell zone, right? This arrow is outside of the zone. Would we take this trade here?
Probably not.
Okay, let's zoom in again. Would we take this arrow here?
It's risky.
It's risky, yeah, but we wouldn't take it because it doesn't meet the rules. So only this arrow here, okay, which we sell the market, yeah? Okay, this one here again, sell the market. Okay, now all this is a strategy. It could be to enter the market. So every time this arrow appears outside the zone, we sell the market. Okay, now there's loads of different strategies. It could be anything. It could be a line, it could be a moving average, it could be something like as soon as price goes into this, we sell it. Whatever, right?
So why is there 2 red lines and 2 green lines?
So this is meant to represent a sell zone. And that's meant to represent...
So what about the one to the left where it's above it?
What, there?
No. That one.
Yeah.
That's above both red lines.
Yeah, that's what we want.
But what here...
Yeah.
There's 2 red lines and it's in the 2 red lines.
Well, that one there? Yeah, forget that. It's not a trade.
But what I'm saying is why is there 2 red lines and 2 green lines?
Because that's how I built the binary destroyer.
Okay.
So it's meant to represent a zone.
But you're saying everything above the red lines is a sell zone. So what's the point in having 2 red lines?
Because I like having 2 red lines. It's a zone. That's what I like.
Okay.
So that's there, right? I don't like that.
It's risky.
Yeah, it's risky. But I wouldn't take it because it doesn't meet the rules. Yeah? Let's look for a buy. Would I take that trade?
Yes.
Yeah, we would take that trade. Okay. Would I take that trade?
Yeah.
Yeah? Okay. Would I take that trade?
Yeah.
Yeah, okay. Let's find a buy. Would I take that?
Yeah.
And that one?
Yeah.
Yeah, okay. Let's find a buy.
Make my eyes go funny.
What is?
Scrolling across.
Would I take that trade?
No.
No, I wouldn't. So you got the rules, yeah? Would I take that one?
Yeah.
Yeah, take that one, yeah. That's actually quite good. Would have got 38 pips. That one there, yeah. So you get the idea, right? All this is just what we do as traders. I feel sorry for her. Such a lot to learn from easy rules. Good luck. So what we're going to do, right, is that just a strategy to get us into the market. Okay? So like I said, there's millions of strategies, and all we do as traders is sit here patiently reading our books, waiting for these setups to happen. As soon as this setup happens, like an arrow appears outside the zone, like the best way to do it, okay, is let's go over and do some trading, okay, and you can watch me trade the AND strategy, and then you'll get an idea of how I trade the AND strategy, and you can follow along. Okay, so let me just right, I need to include. So what I'm going to do, everyone, is I'm going to load up the AND strategy, and I'm going to trade it, and then she can watch me, and then she can get a better understanding of what I'm doing. Okay. So open here. Like I said, she has not ever seen me. Have you ever seen me trade?
No.
Never seen me trade? No. Not at all?
No.
Right, okay, let's load up the 7.0. And like I said, I'll show you how to set up this, okay? As you can see here, we've got our 5 strategies: BD, ANDs, Bends, Pullback, Mogwire. So you can see here, he likes to name himself the Mogwire.
I thought he said Mowgli.
No, it's Mogwire. It's his nickname, apparently. I don't ask why.
Why would it not be Mogwai?
It is Mogwire.
You said Mogwire.
Mogwire.
Okay.
That's how he says. Mogwire. It's a Mogwire strategy. In his whatever accent he's in. Sussex. Where's he from? Essex? Essex, yeah. Mogwire. It's the Mogwire strategy. Right, AND strategy, right? So we'll change the AND strategy. We're going to want the RSI on. Show diversions, yes. Okay, so I've set my binary destroyer up now to get to trade the Mogwire. Okay, now all this is, let me move my microphone over here. I'll put this. Let me put this up here like that. Oh yeah, right. So this is a simulator. Okay, so what it does is it simulates the market, like a live market. So as you can see here, this is from the 1st of May 2018. So this is what happened 2 years ago. Okay, and what we do is we use these to simulate, to practice, to do live. Okay. And what we're going to do, okay, now obviously I just realised I need to really kind of teach you about candlestick patterns and time frames, really. But we can do that in another video, okay? Because we're not really I'm not really teaching you price action. I'm just teaching you to make money with the AND strategy at the minute. Okay, we'll go into more detail on another webinar. Like for instance here, I'll just give you an example. Okay, the most important part. Let me just bring up a blank currency chart. Templates, Forex, right? Now in trading, the most important part about trading is these candlesticks here. Okay, they tell a picture of what's happening in the market right now. So we went over this quickly. Okay, you know, you zoom in and you've got a body and then a wick. See that? So as you can see here, you got your body, your wick on the other side. Yeah? Okay. So when you've got wicks at the bottom, it means buy. Wicks at the top means sell. Because what's actually happening is, okay, is this represents the 5 minute time frame. See here? It says 5 minute time frame. So each candlestick represents 5 minutes. So in 5 minutes, what happened to the price from this candlestick?
Both. It fluctuated.
It went up.
Okay.
Okay, it went up because
It's got a wick at the top.
Yeah, forget the wick at the top at the minute.
The
right?
colour's changed.
Yeah, it's green, right?
It's black.
It's black, okay, but it's green, right? It's green. So what red means the market went down. What black means it went up. Okay, so let's look at one like here. What happened?
Red, it went down.
Price went down. Okay, continued down. Yeah. What happened here?
It went up and fluctuated a bit.
Yeah. So what happened? It went sideways and came down. Yeah.
Yeah.
Okay. So this wick here, you notice how you got a body, wick, wick. What this candlestick means is, you see how price opened up on this candlestick. See this red one here? Look at this red one here. Yeah? Okay, so price opened up at 109,463, and in 5 minutes the price dropped to 109,388. You see that? So in 5 minutes, price started at 109 and dropped down to 109,388. Yeah. Okay, and then it continued up. So that it means price then opened up here, went 109,384 and went up to 109,405. You see that? Now the position and the way this candlestick looks says a lot about trading. Like, it tells us a lot. Like, for instance, here at the top, okay, notice how this one is bigger than this one. This is called an engulfing candle. Okay, you should be taking notes of this, but what's the name of this candle?
Engulfing candle.
Engulfing candle. Okay, right, so the way it works is price opened up. I'll change that to a different colour so you can see it. Okay, you see how price opened up here at there. So price opened up at 109,920. Yeah, price went up all the way because we look at the top of the wick. Okay, what does the top of this wick tell us? What does that candlestick tell us?
To buy it.
No, it doesn't say to buy it. Shows how much you're listening.
To sell it.
It means what?
To sell it.
Yeah, you can say that. What it means is, okay,
you're going to get a good price if you sell it.
You're going to get a good price if you sell it.
It's expensive compared to what it was.
Yeah.
The market's saying that it's like people are pushing it up.
Pushing it down. They're pushing it down because there's a wick at the top. Remember?
So it's going to go down.
It's not going to go down, but it's a strong sign that it is. So what happens is price started here. Yeah, Clark's right. The wick at the top indicates it may go down. So you see price started here. It got pushed up to the top of this wick. Okay, so price got forced up. There was a lot of buyers in the market. Okay, and then it got forced down. And then it represents this wick at the top. So that candlestick tells me that price tried to go higher, but sellers came in and forced the price back down. So when we see something like that, the next thing we look at is the next candle. Right, so obviously in 5 minutes, price went up, got forced back down, closed. The next candle opened, and what did the next candle do?
But people are pushing it.
Yeah, the price went down. It forced the price down. And notice how it's higher, it's bigger than the previous one. So what's actually happened is price got forced up, sellers pushed the price back down.
And it's gone below the other
one. The candle closed, new candle open, sellers came in, the candlestick went lower than the previous one, and then price dropped. So these candlesticks tell us a lot of what price is doing. Like for instance here, these are dojis. What this tells me is uncertainty in the market. So sellers came in. The easiest way to explain this is, right, here we go. Imagine that's just a level ground. That's just a level. Okay, you've got sellers forcing the price down. You got buyers forcing the price up. Yeah, so supply and demand. Sellers, buyers. Like I said before, there's always buyers and sellers in the market. Okay, the more buyers are, the more price will go up because there's less sellers, more buyers. Okay, when price is going down, there's going to be more sellers, okay, and not many buyers. So it's telling me there's a strong selling momentum. It's called momentum. So there's more sellers than there are buyers. And this is what we use. These candlesticks tell me. So this here tells me what?
That the sellers and the buyers were relatively
equal. Yeah, they were equal buyers, equal sellers. So price didn't do anything. It didn't go. It went up, came down, went up. Price stayed the same. So that tells me that there's equal buyers and sellers in the market, right? So that's given us a sign of what's going to happen. So if price is going down, let's say price comes down, okay, and it goes equal like this, what does it mean? Like in terms of which way do you think the market's going to go?
It could go either way.
It could go either way. But what it is telling me is, you can see how price was going down. So if price is going down, that means there's more sellers than there are buyers, because it's the sellers are forcing the price down. Now it's gone.
So if it's had a downward trend and it started to equal out, there's a chance it would start to go up.
Yeah. So what it's telling me here is that we had more sellers, okay, than buyers, but now we've got equal buyers and equal sellers. Yeah. Mm-hmm. So market's slowing down the momentum. So instead of sell, there's now buyers coming in that are overtaking. And as you can see here, looking at the next few candles, what does that tell me? More buyers. So more buyers, less sellers. You see this? So sellers, small buyers. Let me just mute this guy. There we go.
Stop video.
Oh yeah. So you understand, yeah?
Mm-hmm.
So what we do is we use these candlesticks as extra confirmations to enter the market, right? So for instance, here, you know, you can see here when there's a lot of wicks on the top. What does wicks on top tell me?
That people are starting to sell.
Yeah, people are starting to push the price back down, and sellers are coming in. Okay, so price is trying to go higher, but there's more sellers forcing the price down now. Okay, so that's all to do with candlestick patterns. You know, we can go over that when we go over the strategy. Okay, now another thing we can use is a moving average in EMA. Okay, an exponential moving average, and what this does is calculates the average. Oh, I've got 10 minutes left, everyone. So we'll quickly go over a bit of price action here, and then we'll call that a day, and then next week we'll do some strategy, right? Okay, some trading, because I wanted to kind of understand what candlesticks are saying at the minute, right? So this moving average, what moving averages are there for is to tell us if price is in an uptrend or downtrend. Do you know about uptrends and downtrend? No, you won't have a clue about an uptrend. Oh, I've got myself in for one now, ain't I? So an uptrend is when price is going up, and when downtrend, price is going
down.
So why would it? Yeah, so an uptrend would mean people are buying it, and when it's downtrend, people are selling it. So what do you think happens when price is going sideways?
Not a lot.
Not a lot's happening, right? So a rule of thumb: if price is below the moving average, it's a downtrend. If price is above the moving average, it's a uptrend. Okay, so uptrend, downtrend. So what do you think happens when something like this happens? When price goes above, so price was below the moving average and now goes above the moving average. What do you think that happens?
People are starting to buy it again.
Yeah, you're getting it. So we're going from a downtrend into a uptrend, which means what?
People are buying it.
People are buying. So there's less sellers, more buyers. Okay, now what we want to be doing as traders is go with everyone. We want to go with the momentum, with the flow. Right? If everyone else is buying, we want to buy as well. We don't want to sell. You don't want to be that. I'll explain it. You know, you don't want to be, let's say you got let's say you got a load of buyers here, right? You got a load of buyers there. You don't want to be that one bloke or one girl selling it. You want to be buying as well. You know what I'm saying?
Mm-hmm.
So go with the trend and go with the momentum. Can do a quick screen share to show you how I'm using it to trade bigger frying time. Yeah, how do I do a screen share, Vert? How do you share your screen with me? This is Michael Vert. You know him?
No.
You must know Michael Vert. Scottish guy. Open my mic. Right, hold on.
No, it's there.
Where?
There, in
There.
the more.
Right, I've unmuted you. Can you hear me? Well, talk.